What's up, you guys? It's Matt here. Thank you for joining me on another NFA video. Now, in this, I wanted to talk about AMC. You know that we've been following AMC for quite some time. We've been holding a lot of AMC, which I will show you, what I am holding here. I do have some over in Fidelity as well, but I will show you that, as well as show you an update for AMC and where it actually stands, as well as give you some information as to why we are seeing this move, because AMC is definitely making some positive moves today. Love seeing the stock market, love seeing the stocks that I'm in, make some positive moves. And AMC pretty much deserves it. I mean, with all of the, tearing down of, what they stand for, who they are, and, how they were trying to recover, they really deserve something positive. Honestly, they do deserve a major amount of positivity. So, anyways, I wanted to get into this, talk about AMC a little bit, and give you some detail as to why we're seeing this movement. So hit the like button, hit the subscribe button, hit that notification bell for more videos like this one. Also, make sure you guys check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter at Perry8K, you can follow me over there. Don't forget about some of the other links that are in the description for my Patreon, for Discord, for all of those stuff. So feel free to check out those things as well. But this is the news that we're standing on, right? AMC stock pops, APE tumbles as the court won't okay the share conversion settlement yet. So this was news that I brought to the table. There were a lot of people that brought it before me, but I brought to the table on this channel talking about the settlement and how APE was going to be basically converting over to, AMC common shares and basically diluting the position as well. You saw APE that ended up skyrocketing, AMC ended up falling quite a bit, and now you're seeing quite the opposite, which I guess the only explanation as to why you would see that is if you didn't get the okay, or you didn't get the okay yet. So AMC shares bounced Thursday morning, while AMC's preferred equity units, APE, tumbled after Delaware's court of chancery ruled Wednesday morning against fast-tracking a proposed settlement with shareholders that would allow a capital raise for the theater chain and the meme stock. I wouldn't call it a meme stock. Let's just call it a stock. Obviously, people are behind it. We're gathered behind it, but I hate when they use that term, because they're always trying to belittle what AMC has done, the community behind it. And I see what they're trying to do there with just simple terms that are there. So late Monday, AMC Entertainment and SEC filing disclosed a binding settlement with the plaintiffs in the shareholders lawsuit regarding the movie theater chain stock conversion plan. Plaintiffs would get common shares in return for AMC. The plaintiff and AMC and the plaintiffs would request that the status quo order be lifted, allowing for a conversion of APE stock into AMC stock. AMC would also be allowed to carry a 1-to-10 reverse stock split and have the right to sell more shares. But lifting the status quo needed court approval to forego the usual process. But the Court of Chancery, Vince Chancellor Morgan Zern, hopefully I'm saying the name right at all, ruled against that Wednesday, saying AMC Entertainment is moving too fast. Probably. AMC lawyers had argued that the settlement was contingent on the status quo order being lifted. AMC Entertainment issued AMC Preferred as a way to raise capital without directly issuing more AMC common shares. Early Thursday, AMC stock leaped 20% to $4.85. APE stock tumbled 12%. Now we're going to take a look at that. So obviously, the reason why you would see something like that is because the opposite did happen, right? It was not fast-tracked. Obviously, people look at this and they go, all right, well, it's going to be diluted because you're giving them the chance to, one, reverse stock split, which takes away from the hype building and how much you can actually get to. It shouldn't take away from how much you can gain, especially with all of these shorts that are in there, but it should take away as you see more dilution that's added to the position, not just saying that you're reversing a stock split, but also sell more shares, as well as have AMC or APE that ends up getting converted into AMC, which creates a ton of dilution in two different ways. But let's look at where AMC is right now. As you heard, they were up 20%. You're seeing it up higher today. It's up to $4.90, up 21% as of the time of recording this video, which is 12:54 p.m. We did see this to a high today of $4.95. Still, sitting around that 20%, 20+% gain that is there. If we look at the movement over the day, we saw this absolutely skyrocket from the morning, from open. Really, we hit that $4.95 level, and then we started to level out, and now we're sitting at about $4.91 after sort of coming back a little bit or consolidating. I guess you can look at it that way, but $4.95, that's great. It's nowhere near where the high price was, where it was $76. But this is only saying that it's not going to be fast tracked, right? It's not saying that this is not going to happen. It's saying that it's not going to be fast tracked. So we have a little bit of time that we're not getting hit with kind of negative news after negative news after negative news. Now, ultimately, this doesn't really change it doesn't really change the goal that we have in mind, where we have, they're going to recover or buy back some of these shorted shares, or basically cover those shorted shares is the word I was looking for. And you have 24% short, so you're still going to see a massive impact to the overall price and see it push quite a bit. But the point is that people are making this a big deal about the dilution portion, which does really factor into what we can, or it kind of pushes some retail traders maybe out that don't believe that this would take off with adding more shares, right? That's what we didn't want from the beginning. We have always had this discussion with Adam Aaron and every single person that talks about stocks and investing. They basically made it clear that diluting the position would not be the best situation. It would be great for AMC, and you would see them be able to raise capital and, get out of this hole that they've been in for quite some time. But they're consistently losing money, and they need to find a way to get to a point to where they are making money, and they're launching all these different things to get to that point. But they want to get dug out of this hole. And that's the best way that they can do that, is by selling more shares, offering more shares, raising capital. But we don't want them to do that, because we want to see them cover their shorts first. Then you could find a way to raise all the capital you want to raise. Because if they find a way to cover those shorts, or if they actually cover those shorts and we see gains, we end up seeing higher prices. Well, now they can sell whatever they want at certain levels, and they're going to make a ton out of it and be able to pay off all the debts that they need to pay off. So honestly, this isn't the worst thing possible, but when it gets to the point, if they can do a reverse stock split, they can sell more shares, APE gets converted directly into there, you're creating a ton of dilution, which could be bad. But we're seeing a 21% gain today. So it hasn't been fast tracked. People are excited about this, and you're seeing APE that's dropping in price, AMC that is rising in price. So anyways, guys, hit that like button. Let me know what you think about this. Hit that subscribe button, hit that notification bell for more of these videos. But I'm going to get out of here, and I'll catch you guys in the next video.